Hello everyone! Welcome back to the RationalInvestor.com's Daily Brief Recap! Wow, what a difference 24 hours makes, eh? Especially all those people that are very interested in crypto. Did a broiler chicken show yesterday. And around the time that I did this show, everything looked like it was just about to fall off a cliff. Finished the video, and then all of a sudden, rallies started to come in out of nowhere. So that was encouraging. I do remember specifically yesterday when we were doing the video for the public. Let's see, which one is it? It's over here somewhere. We've been watching, the weekly chart just look like a train wreck the middle of yesterday. And then through the day, they just begrudgingly dragged her back up to close. Still technically bearish. But interestingly enough, there is sort of yesterday's price action. Like I said, when we did the video halfway through yesterday, we were just like on our knees here. Big counter trend rally through the remainder of that Sunday session. And opened up, basically beep, and then that rally just continued right on. So, phew! The message out of the daily brief today was, holy crap, we just dodged a huge bullet there. The only problem that I have right now is, is this a new bull market? Oh, that's awfully tough to say. Definitely like the idea that we had kind of mentioned it yesterday. Wasn't really going to fault traders for coming in and simply buying against these low ends of ranges. And actually, I think that we did the video here. And I had also said, watch for the FU, because, oh boy, this could be messy. And indeed, right there at, what the hell time is that? Looks like about 1, 2 o'clock in the afternoon my time. What we call the Asian kill zone, right there about 4 or 5 o'clock. They pulled a nice little dump and then just cranked the market back up. Through this event, we had to be worried about things like bearish divergence and how was this bearish divergence going to play itself out. Well, interestingly enough, when we took the market to new lows there on this candle here, you notice the momentum indicators did not go to new lows. So we can actually say now we have a confirmed bullish divergence working now. So if we are bulls, and hey, this is encouraging, thank heavens. Things were looking horrific there yesterday. Then what we'd like to see is the market calm down, put in a nice W through this period here to take us higher. If that does happen, then of course that's going to play into the hands of the guys who just simply stepped in and bought the bottom end of the range. And I don't see any reason why we can't rally back up top here, through the daily brief. We talked lots about the fact that this, to me, looks very much like what we call a Hogue 80% value trade. So we tried to accept below value. We accepted back into value. And now 80% of the time, now that's not 100%, but 80% of the time, we usually like to go up and tag the top of value, which, gee whiz, is going to take us right back into that original fail structure there from a week or so ago. And my hunch is probably the really sexy place to be hunting short trades is right up in this node up top here. In fact, we could probably move Mr. Hoagland right up to that little notch, because my hunch is if there is a short, that's probably where he would be interested. So encouraging to see this, considering how horrifically stomach churning, worried I was yesterday afternoon. So, phew, dodged a big bullet there. And we do see this right across the board in a lot of sort of crypto related assets. So what the heck's going on in the world? We just went through our June, July celestial pivot. Oh, that's an interesting screen. Quite sure what the hell I put on there. So I get the impression that this is our funny little study that I've been following along here. I actually get the impression that we're actually going to do the exact opposite of what we just did over the past month or so, heading into the end of this sort of fractal period. I mean, you know, they always say history never repeats itself, but it often rhymes. So just as we sort of had this big pump up, which of course is risk off, fear, oh, sky's falling, I get the impression we're going to have a corresponding risk on rally. It's almost a little shocking how close this actually is. And I wouldn't be surprised, you know, if we actually go and find the actual moment that the conjunct happened. It probably was this candle, but that's, you know, who knows, here or there. Point of the matter here is that I actually think we're in what's going to be perceived as sort of a risk-on-y. There might be like 1 or 2 day checks, but sort of risk-on-y type environment until we get to that, you know, is the U.S. Congress actually going to pass this next planned stimulus package? And the interesting thing about that is I think the jury's still out. And we might find that on that sort of, and maybe that's what this counter trend rally period is. I don't know. I mean, we're trying to predict the future. Good luck. But my hunch is, just basically speaking, that we're in this part of the window right now. And this is sort of risk-on-y, which is interesting. Because if we go and look at things like risk assets, they're still doing pretty well. Of course, you guys all saw what I just said there about Bitcoin. Stock market did press higher here this morning and looking very strong. All of this sort of darlings of the market, Amazons, all those kind of names, they're all really, really happy right now. Actually, we had an interesting presentation on Mondays. We have one of our OGs come on and talk to the community about fundamental analysis. And it's interesting, we had a long conversation about what does this stock market look like in reality. The problem here is that this isn't real. And actually, it's too bad I didn't have that image of Jamie's. Maybe Kevin, if you can find it. The Fed has basically, to all intents and purposes, doubled the size of their balance sheet, i.e. doubled the size of the amount of currency outstanding, i.e. cut in half the purchasing power of the currency. So if we actually look at an image like this, and I'll just do this for now and then I'll change it back. But if we look at an image like this, what you actually see is we're nowhere near the old highs on the stock market. And what's like, this is a image of constant dollar terms. Feds doubled their balance sheet, i.e. they doubled the amount of currency outstanding. Well, you know, technically the value of this should be divided by whatever the hell the currency is. If the currency is stable, which, you know, we used to live in a world where currencies were stable, then when you just price it in dollars. But that's not the real world we live in. This is the real world we live in. I think you could actually make the argument there might even be a nice little W trying to come in here. And, you know, the crazy thing is, if we do good old reload zones, you can see that in real dollar terms, we could still see a pretty substantial stock market rally. And gee whiz, I even mentioned this in the video yesterday. If we look at regular dollar terms, there's big old gaps on the S&P chart up top here. My hunch is when those gaps are filled in up top, on this particular chart, we're actually going to see the actual S&P probably at substantially higher highs. So, you know, if the Fed has stopped printing money, and that's it for the balance sheet expansion, then this is, you know, the image that I would use. But my hunch is there's another big round of stimulus coming, which is going to knock this in half again. So, anyway. Yeah, kind of a tangent there. Really, the message of this chart showing you is not so much what value is, but just, you know, what's the temperament of the market? What is the appetite? And today, right now, you can clearly see stock markets are moving higher. Risk is on. And interestingly enough, with the actual failure up here near the top of the reload zone and then the deep test of these lows, this actually creates a nasty harmonic that, believe it or not, paints a bullish objective up in this area. And gee whiz, all that's going to be is just an underside test of this trend line. I won't go into any more detail about what harmonic this is, but just be FYI, it looks like we're pressing higher. Then if you go and look at something like the Nasdaq, I mean, it's just absolutely on fire right now. So it's very tough for me to want to step in front of that. There's the Nasdaq just absolutely going bananas here. So show me a new high and I'll show you a buy. I mean, that's a damn strong market right there. We did have sales setups come in, and I did have short proxies that I put on. When I started to see sort of signs of reversal, I kind of was like, you know what, I don't need to be a hero here. I'm just going to walk away, and frankly speaking, that wasn't such a terrible idea. So we completely lost that 525 key low on the SOX inverse ETF, but now look what's happening. Can you see this beautiful bullish divergence starting to develop in here? Willie now is officially stupidly oversold, so now I can start hunting W's to start thinking about buying this back again. But this is going to take some time to develop, no doubt about it. Interesting, we sort of postulated, you know, what does a trader's life look like? What does a trader do? Traders got to trade. Ironically enough, a lot of times traders, all they got to do is just identify levels where you have relatively asymmetrical risk. If you're right, you get paid big time. If you're wrong, you get slapped out with a relatively small loss. So ironically enough, you know, we just sort of walked through what would this look like. Not quite sure why that moved. I think we had the trade up against these highs, if I'm not mistaken. So that one got blasted out, right? Bang. So we said, okay, well, you know, here we got a spinning top, we got a gap lower, we got a reload zone. Let's see what happens on this one. And I don't know what's going to happen. Let's take crude up to a new high. All right, fine. This one gets stopped out. Then we'll keep hunting. So, you know, risk on. Market is up. But at the same time, too, you know, kind of like that Bitcoin buying against the low end of the range yesterday. I don't know what's going to happen. Here's a great example, selling against top end of the range. I don't know what's going to happen, but let's see. You know, those people that had the balls, if it was in your trading plan, you took the trade, well, right on. Where was that? That was this one over here, eh? I mean, they're pretty happy campers right now. And that's the weird thing about trading. I try to tell you guys day in, day out. I mean, you just don't know what's going to happen. So, you know, if you are, hey, I love gaps. Hey, I love reload zones. Hey, I love it when the 50% level is a million miles away from where market is. If that's the type of trader you are, and this is the kind of trading plan you like, I could see a harmonic in here too that would probably paint a level in there. I can also see that this could potentially be a massive head and shoulders, so that's also a great level to be hunting. I can see candle body highs. That's another great level to be hunting. Whatever. I mean, you can build your own plan. The key here, of course, is when all the shit comes in, you got to pull the trigger. That's the hard part of this game. So anyway, so as it stands, you know, risk on, still catching a bid, and like we said with crypto, we're catching a nice bid here today. Risk off. Bonds really aren't doing a hell of a lot here, and I didn't see much out of the Japanese yen either today, so I don't really think, you know, obviously with the stock market moving higher, to be honest with you, I was a little surprised that we didn't see a little bit more sort of freak out, I'm a scared chicken shit kind of talk out of the risk offers heading into the weekend. I mean, there really wasn't that much of a bid, but fascinating to see the gold keeps working its way higher. And I don't know whether you're aware, but the United States of America has decided to drive two big aircraft carriers into the South China Sea, which in itself should ratchet up the globe's temperature, and that might be one reason why the gold market continues to outperform. It's interesting how it's disconnecting a little bit with the bonds here. But we do see the yen is trying to turn back up here. Is this a head and shoulders? I mean, there's not really any trade there for me. But as you can see, you know, our sort of talk there a moment ago, risk is definitely catching a bid here today. In a weird sort of way, I kind of think gold is caught between sort of a rock and a hard place. It can be a fear asset, sky's falling. You know, I don't want to be in anything other than something that's hard, tangible, that I can put my hands on. At the same time, too, if the economy is really growing and the Fed's diluted the purchasing power of the currency, this all should be like hyperinflationary, which should help the gold case. So in a weird sort of way, I'm almost feeling right now, and I hate the thinking because it's terrible investing thinking, but it almost feels like now, and especially into that Jupiter-Saturn cross and really this whole year, that gold's in one of these kind of rise-only market states. Now the problem, of course, is if it gets too far too fast, you can get big fucking face slaps that destroy the late buyers. So be careful on the buy side, but you know, it's interesting to see gold just keeps surging higher here. And we should probably go look at that gold-silver relationship again. My hunch is gold's probably starting to outperform silver again. Well, we'll see. So, you know, our risk on, risk off kind of conversation today, you know, with the stocks happier, bonds, it should make sense that they would be a little less happier. Still think this is a debate as to, you know, narrow sideways channel. And for whatever it's worth, like, I think that this is a long-term cycle top in bond prices, bottom in interest rates. But, you know, market can remain far, well, illogical, you know, far longer than any of us can remain solvent. So you just sort of got to go with the flow. I still like this strangle trade that we proposed a while ago. And I don't really want to sort of make any conclusions about this kind of strangle approach. Ironically enough, if you missed the strangle before, you could go and strap on a new one now until these levels are fully traded to. And there really isn't anything for me to do in here. Big hurry up into nothing. And there's our crazy gold. You know, bonds, but gold's enjoying a bit of a bid today. I mean, I suppose watch out for double top breakdowns if the oil does break out higher in earnest. Well, that could be problematic for the gold. And I also noticed too the gold stocks, they are just like the gold, sort of making higher highs and higher lows, but they're kind of looking waffly here. Maybe we could have a week or two with that sort of US dollar risk on kind of window that I was showing there a moment ago. Maybe we could have gold take a week or two and just clean up some of all these gaps and sloppiness on the chart. That wouldn't surprise me as well either. So, you know, the one area of the market that I actually really like right now is there's a number of these little junior stocks that are subject to my VCIM model that are all just putting in the most beautiful little weekly W's. And I think it's a function that we're getting ready for the next sort of growth cycle that this is happening. But I'll tell you, man, I'm building my shopping list. There's no doubt about that. Got a whole bunch here that, you know, 10x on these things. It's not really that big of a stretch. Geez, you can see this Sky Gold. They're already starting to bid it up here. Wow, look at that volume. Look at this. This is a pharmaceutical stock. Look at that chart. It's just beautiful. And somebody's coming in here hard on the buy side. So, oh, and I wanted to point this out to you guys before. If you ever see this, write this down, for God's sakes. If you ever see an outside, upside, weekly key reversal, holy Shiite Muslim. And you can quote me on that. Take a screenshot. Right, holy Shiite Muslim. That is a very powerful signal. So we'll see what happens. You know, the great part about this, proof of pudding's in the eating. Just watch what happens. There was one that I pointed out to you. It wasn't a weekly one. It was a daily one, but it just looks so pretty. And you'd think, just one bar? Why would one bar? Why would the market take off? But man, it's cool to watch happen. RFP in the US. Boom. I mean, look at that reversal bar. This is off an hourly chart. What do you think? Is it worth paying attention to that upside key reversal? What was really interesting about this, of course, is it came in on the daily chart. That same bar was this bar here. And the market's just like, I have no interest whatsoever in going down whatsoever. It's such a great tool. Learn it, live it, love it. This shit works. You just got to learn it. All right. Where shall we go next? I guess as an interesting commentary to sort of the fluffiness of the market, we broke out of this downtrend line on the Russell 2000 versus the Dow. And I do see some junior stocks. What was that stock that you guys all knocked off a monster win today, Kevin? I mean, just these guys are just killing it. And I think I've said to you before, the great part about what we do at TRI is it's not just the Brian show. We're a community, so we're all trying to work together. Look at this goddamn one. This is ridiculous. Ready? Bang! I didn't take this trade. I'm sitting here going, why the fuck didn't I take this trade? And, the cool part about this is like, Mr. Barstool, you think you're a stock trader. Fuck you. You don't know what you're doing. I mean, this is ridiculous. 423% on the day. One day. Merry Christmas. And Kevin, did you take this trade?
I did.
There you go, folks. Way to go, sir. So
it was a call by another guy in the lounge.
Yeah.
So shout out to Danielle.
Sorry?
I said shouts out to Danielle. It was a good call.
I mean, this is what we do at TRI, right? Now, the difference between TRI and Mr. Barstool is, you can go and throw like half of your net worth into a big blue chip stock, and if it doubles, okay, fine, great, you're awesome. And he goes on social media, I made hundreds of thousands of dollars, look how smart I am. But what he doesn't understand is risk management. And one of these days, Mr. Barstool is going to buy something, and it's going to bite him in the ass, and he's fucked. Once you're underwater on one of these big names and you have a big chunk of your net worth in, you're screwed. But what we do at TRI is we're not greedy. We obey risk management rules, and we're just running our small business of trading. Does TRI go and put 100% of their portfolio into this one name and roll the dice? That's not smart. Could you go and put maybe 3, 4, maybe even 5%? Remember, that's our absolute maximum risk window. Do never break that 5% rule. Okay. You're going to have damn healthy returns, but if the name doesn't work, you're not going to get destroyed. That's really the key to professionalism in this game. But I'll tell you, TRIers are doing this shit day in, day out. And it's a lot of fun. I mean, it sure makes capitalism a lot of fun when you get to do that kind of stuff. So, it's the irony of it all is that when these things are actually buys, hopefully everybody can see bullish divergences. Why would Kavarkanator be interested? This Willie stupid. This has got all that El Tangonator TRI shit written all over it. But the thing is, at this level here, nobody's interested in this. Nobody gives a shit. Who the hell is this? UNUM Therapeutics? What the fuck is that? And it's only now that the public goes, hey, maybe I should pay attention. But what do you think TRIers are doing on a day like this? Are they buying or are they selling? So anyway, really interesting analogy. So back to our talk about what the heck I want to talk to you guys about. I'm not really overly excited about chasing new names in here. I'll go and buy my VCIMers because I know where the directors are long. I know how much stock is out. The old shareholders are destroyed. And I don't mind parking money and those good quality names. I'm a little leery about chasing too much unless it's an absolutely bulletproof, kind of like El Tangonator setup where you're just like, you know, I can take that risk. And I don't see a lot of stocks like that right now. In fact, actually, we were sitting here for about 10-15 minutes kind of going, what are we going to talk about today? I don't know. So, you know, everything's sort of after the fact. Having said that, there are always ideas out there. I thought this was a really interesting one that I was looking at here recently. You know, they rolled the stock back, shares for debt, which I love. Whenever you hear shares for debt news, that's super sexy. And this one's a pretty good example where, you know, reload zones down in here. RLZ, so you can see if you were just sort of watching it off of this range, gap fills, actually got nice little railroad tracks. What's really interesting about this one is, of course, it's Canadian, so it's like a bank proxy. So in a weird sort of way, you know, if you play a stock that's been recently rolled back and shares for debt and the banks are all over it, well, that's almost kind of like it's got like a, you know, a golden ticket of approval, if you will. So I kind of like the name. I don't know. I mean, I went on the website. Frankly speaking, I think the product's a little bit cheesy, but you know, that's here nor there. I'm gonna just ride on the big boy's coattails. What I wanted to show you here, but I don't know whether I can or not. Where the hell was it? Was it a weekly? There was something about this chart that caught my attention this morning. Actually, gee whiz, I didn't even realize that. There's a really good looking example of a weekly outside upside key reversal off of that level there. But what the hell was it that got me so excited about this damn thing earlier? Anyway, I'm not quite sure why, but this is a stock that I had bought. I am in this. So it's sort of sitting in a relatively respectable location. You know, I don't know whether you want to go and chase this in here. That's up to you. But interesting, we came down into RLZs, just sort of kissed them, and now we're starting to turn back up. There was something about this that caught my attention earlier. I can't remember what it was. Oh well, yeah, I'm just wasting time. Man, we had like a 2-hour long daily brief today, so it was super long. Probably talking way too much here today as well, but oh well. You know Brian, he loves the sound of his own voice. Kevin, can you remember what it was that got me all excited? Why did I want to mention this one? I can't remember. Anyway, well, I mean, it is an idea. And what I like is shares for debt, so in essence, there is value down here around $1.25, $1.25. Yeah, I can't remember why. Something about that. It'll probably come to me the moment that I finish the video, but it will. All right, now on to obviously, and I started off the video on this because clearly this has got everybody's attention here this morning. Yo, Bitcoin! I gotta tell you, man, I'm actually really surprised we held in there yesterday. Things were looking pretty damn bleak. We'll say hats off, and you know, as I was saying, you know, if you're a trader, you got to step in against the bottom end of the range and buy those and risk against the bottom end of the range. Did have a couple people while I was saying the video go, yep, that was me. Yep, I got to buy. I got no choice. So congratulations to all of you who had the balls to step in there. Way to go. A little concerned about this move because it does appear to be coming in on a pretty light volume. So you can see through the daily brief, I was talking lots about what I really would like to see out of volume here to actually believe that this is the bottom. We go straight up from here. And I don't know whether I see it. Now, you know, an old TRIOGer, Da Vinci, he loved, when he was in the school program, to hunt for things like W's in RSIs, W's in MACDs, and W's in OBVs at the same time, i.e. our Davos signal. But the problem is we don't. And we got the W's in price momentum. Price momentum looks pretty damn sexy here. You can see the W's coming in on MACD. W's in RSI. W's in Willie. Willie never did get stupid, though, so that kind of concerns me a bit. But nonetheless, short-term price momentum is with the bull. So congratulations, bull. I remember yesterday through the video, I explicitly said, for God's sakes, if this thing really is a bull, you got to get it back above 9,300. And you notice that's exactly what they're trying to do right now, desperately. Problem here, of course, is the day's not done. Don't go and crap out and slide back down here. That would suck major horsecocks. But if we can close out up in here, confirm the W, then hey, maybe we got something to work with here. You know, V bottom, V bottom, V bottom, V bottom, V bottom, maybe W. Oh, inside bar failure. V bottom, V bottom, VA, W, son of a bitch. So, I mean, what we really want to see is, let's see some serious buyers come in here. Somebody step up and buy. If we don't get the big volume surge in here that I'd like to see, then I still have to think that we're trapped in a trading range. And the worst part about this, right, is that you can actually see this rally is doing nothing more than just taking price back to where everybody on the street is either long or short from. So this is where everybody is in the market, is right along this line. In fact, actually, we drew a chart. I don't know where it is, though. Yeah, this one. Remember, oh, actually, not this one. But I had shown you a chart recently. There's a big harmonic objective in here. I don't know where the hell I put that chart. And we just seem to be oscillating right around. Here it is. Yay. So this was a big harmonic for one of our harmonic OGs, Steven, this pink, purple, whatever the hell the color is. And then I thought it was really interesting that last week we put in a beautiful little bearish harmonic and an inside bar failure right off that level. And what I noticed this week, is this is actually a harmonic as well. I don't know whether you can see that, right? So down, up, and I thought this was fascinating, that the price objective of this particular, if this is actually, I think it's a bat, I can't remember. Its price objective is actually right at the original inside bar failure from the previous harmonic. And notice, I don't know whether you can see, the colors here are a mess. Here, I'll get rid of this. Hopefully you can see there is a big gap on the charts right at that level. So that's what this yellow line is. So I like the idea that we were peering over the edge yesterday going, holy fuck. Turns out no sellers showed up. So the market's like, screw it. If there's no sellers, I'm going back up to find some business. We've rallied back up, trying to confirm this little W here, and now it looks to me like they want to go test the top end of the range again here. I do have a couple puts on the books. Of course, I am long a ton of crypto. So it's not really like I need to do anything here. I've got my insurance plan. If anything, what I'm thinking, if I do get a rally up top here, I might think about buying a December put because I've got a bunch of Septembers. But other than that, there's nothing else really for me to do here. And I don't really like this as a new quote-unquote buy signal because I just don't have the internals to sort of support that kind of momentum push. Yeah. So you can see volume, very suspicious. I love the MACD here. Now what this means is if this MACD div does confirm here, because it was a divergence, and actually that's what this chart is. Divergence came in, right? You can see we went to lower lows here overnight, but the MACD did not go to lower lows, and then we broke out. So what our trading plan at TRI is let the divergence come in, then look for your market structure. So at this point, actually, believe it or not, if I really was bullish, I'd like to see this volume pattern start painting higher highs and higher lows. Give me those W's. And I'd like to see price come in and paint a nice W. Get all that with all this still looking happy. And I think we actually might have the case for a bull. Right now, I still entirely think that we are in a trading range. And just like the stock market, just like all the risk sort of asset proxies, it looks to me like risk wants to go back up and test the top end of the range. Think violently flat markets. If anything, that is a perfect analogy of a violent, but ironically enough, flat market. That's sort of the way I'm looking at the market right now. So if we try and wind this up here today, I'm not quite sure how long I've talked, but probably way too long. As it stands right now, I guess I'm still, as long as this high is taken out, still in place, I'm still looking for this bearish objective. Looking for some resistance up against this trend line, that candle body. Remember the gap up there, 78.6. I wouldn't mind actually a nice failure up there. Interesting thing about something like Ethereum is it's actually already done all this move. So on something like Ethereum, I was still interested in buying some more puts, and it's actually gotten up into my trade level here. So as you can see through the daily brief, I was talking to the audience about this. So reload zones within reload zones within reload zones. Gee whiz, this is looking pretty sexy. And on that daily chart, I had sort of told you guys recently, if I get rid of this little squiggly one, I think that's maybe that one. Oh well, I guess I got rid of it. I was looking for this counter trend rally into this RLZ. Now you saw how it happened on Bitcoin. Got a nice little inside bar there. Maybe paint a nice M like I showed you off of that lower time frame. I'll probably go buy a put. And you can see how the ABCD has actually completed itself. So we are in what I would consider overlapping zones. And also too, this makes sense. Usually they say there's Tuesday, Wednesday, London kill zones, or 70 to 80% of trends are established through then. So I actually do like the idea over the next day or two that we actually carve out some sort of top somewhere up in here. So I just have to be patient. And then just like I've said repeatedly to all of you guys, in this case it's not so clear cut, but things like the poop coins, I think it's pretty simple. On Bitcoin, I think it's pretty simple. The simple message that I try to give to everybody is, look, if this really is a bull, and keep in mind, there are stories that you can play. Look at this beautiful vet that we've talked to you guys about. Move stop to scratch, move stop to trailing. Look how close it is to his objective. Could it hit that objective? Sure. It's trader's life. We sort of walked you through this whole thing. So there are ideas that are just doing their thing. But, on balance with regard to crypto, and I could see it happen. I'm not saying it's not going to happen. I could totally see it happen. All I got to do is just go take out this top, please. And I got to say, sort of finish this kind of thought. This actually isn't too unrealistic, because when I look at like crypto breadth, I was trying to show the site this earlier today. I was shocked when I saw this. I mean, here's that shit perp index that I was just showing you. Just go take out these highs and it's a bull. But look at this. This is our little fundamental analysis index. It's Wing. This is the Trex index. It's Wing. Binance. It's Wing. And there's good old Bitcoin. It's trying to W. I don't know what's going on here, but I'll tell you, it sure looks like risk is catching a bid here, folks. So go and break out here. I mean, these guys, they got a long way to go. But, especially this let's try saying that 10 times fast. Shit perp index, it's not really that far away until we can actually go, you know what? This market looks bullish. So let's see what happens, folks. Stay tuned. Never a dull moment. Sure can change on a dime, eh? Jesus. Difference between yesterday's presentation and today is almost like night and day. All right, everybody. I hope you got some value out of that. Slow and steady wins the race. Trade your plans. Trade your setups. Don't take no wooden nickels. And, of course, remember what your #1 job as a trader is. All right. All the best. And the only thing left for Brian to say is bye for now.